Corweave stock went up over 19% today, and the stock is finally sitting over $100. This is insane, as this stock in the past month is up over 203%. Now, in today's episode, I want to take a closer look at what's happening with Corweave, my overall thoughts, and how I'm handling this position that has just grown so quickly for me in such a short amount of time. So let's take a closer look in today's episode. So for those that have been following this channel, on April 24th, I did a video on recent stocks that I have kind of purchased during this whole crash that we saw in April. So if we kind of look at that, April 24th, I believe must have been like a Friday or something. Right here, April 24th was actually a Thursday. So my purchases had been a few days prior, and my overall cost basis for this stock right now is sitting at about $40 and something cents. So I purchased, I don't remember exactly what day, but it was below the 40 price point. And then throughout these videos, if you have been watching my channels, I've talked about when I've added a little bit more. So Corweave at one point, and cost basis was about 5 to 6% of my overall position with the net new buys that I had done. Now, the stock in the past month has gone up over 203%. So that position has gone from mid-single digits to a hefty, nice amount of low-teen double digits. And I think that is impressive for something to happen in such a short amount of time. Now, you guys know me, I'm super heavy in the AI market, and that overall portfolio allocation, portfolio understanding of what positions you have help me dictate what is going to be my next move. So I'm already very heavy in the AI market. For that reason, I have talked about in the past where I am not worried at anything over $80 to sell off positions over time. And I talked about it maybe about a week ago when the stock was sitting at 80 that I was contemplating selling some shares. Now, I also talked about in the video that if I do sell some shares, I would not sell the whole position. I'm still with that mind state because again, I'm already very heavy in the position in this company. I'm very heavy in AI space already as well. So for me to lock in some gains here seems like a no-brainer. But what also to me seems like a no-brainer is not selling the whole position, because I'm not bearish in the stock. I am just very excited with the types of gains that I've saw in just a few weeks. And again, if I invested a few tens of thousands of dollars, this overall has become very big money that I can use for other investments or other aspects in my life. So for me, it's you should never come to this channel to see how or what I do with my portfolio and copy it, because my overall lifestyle might be different than yours and my overall thought process might be different than yours. For me, my thought process right now is I don't mind locking in some gains. I'm not selling all of my position. I'm going to keep a position, but I want to reduce my exposure on this company or just the AI market. And I believe this is probably one of the best ways to lock in some gains and use them for something else in the future. So let me know, what are your thoughts? Are you buying Corweave right now? Are you selling Corweave? Where do you think this stock is going? Now it has a market cap of roughly $51.4 billion. Now, check in here on FinChat. And again, if you've been seeing, we're going to be using a lot of FinChat platforms. This is my favorite data platform for investors. I even have a special offer for you. So make sure to check out finchat.io/Jose. The link is down on the comments below for you to get 15% off. I'm telling you, there's a lot of great information. They do have kind of this AI solution. All right, so we're going to be looking at a lot of different things here. First is the company's most recent earnings, and I've highlighted a lot of great information. So the earnings came out about a week ago. I did an earnings video, so make sure to check that out. But the transcript was not there because this was a brand new company. And now I kind of want to talk about some of the excitements about Corweave right now. So in Q1, they completed a strategic deal with OpenAI, the contract value for which is up to $11.9 billion. They have also added new enterprise customers and a new hyperscaler and signed expansion agreements with several large customers, including a recent $4 billion expansion with a large enterprise AI player, the details of which will be included in our 10Q. So a lot of great things came out of their earnings. I mean, we can see $4 billion. We've ended up finding that that large AI enterprise player was OpenAI. Then they also signed a new hyperscale customer. And one of the big risks associated with Corweave was that a lot of their revenue was coming from one player That is changing a little bit, and we'll talk a little bit about it. But adding a new hyperscaler is also very, very crucial. One of my favorite things about Corweave is they are the first, being the first to deploy a GB200 Grace Blackwell systems at scale on their AI platform. The reason being is Corweave, it might be a little bit different than some of the other players. Corweave kind of has this mentality of being the first to drop these systems and then have these long-term contracts with big players. There's other companies, maybe like Nebius, which maybe focus a little bit more on other aspects or other players or other customers. To me, this is probably the best move to do to make sure you are super profitable in this AI infrastructure market, which is very, very crucial. So the ability of building up the new generation as quickly as possible, the AI infrastructure allows you the opportunity to sign these multi-year contracts for that infrastructure and understand that you will make a profit on that solution. But outside of their payments on OEM vendor financing and self-amortizing debt through committed contract payments, they have no debt maturity until 2028. So I know a lot of people worry about this company's debt overall. Obviously something to monitor, but we can see they really have no other debt maturities until about 3 years from now. Now, again, a lot of information that we can pull out here from finchat.io. Some other things in regards to the hyperscale client, there aren't that many hyperscalers. So one can look at their website there and assume who the addition is. And they're very, very excited. If we actually go to Corweave's website really quick, we kind of look at their customers. One of the first names that we normally didn't see there, I think, was Google. So Google, definitely fits that hyperscaler mark, and it does fit kind of the website that they tell us to kind of check out. So we already knew Microsoft was a big player here. We also knew OpenAI. Now we see that Google potentially seems to be the new hyperscale winner, and Google spends a lot of money on AR. Also, with regards to customer concentration, since they get that question a lot, at the end of Q1, there was no entity that was more than 50% of their backlog. Now, their CapEx follows as they invest for committed customer contracts and can be lumpy based on that as well in the deployment of their data center in general. So they're kind of saying capital expenditure follows revenue. If you see them expending a lot of money in capital expenditure, then that is going to be very, very bullish for revenue potential. And we do know, we're going to see later on, the second half of this year, this company is expected to spend a lot of money. Now, I do believe that might be it on everything I have here from their overall kind of transcript. And again, you can check that out in finchat.io. Now, obviously, a lot of growth things there. And now I want to maybe talk a little bit of one of the biggest bear thesis right now outside the debt and kind of the AI infrastructure market. I'm very bullish in the AI space, but I think right now the biggest question of all is this company overvalued? And it depends on how you're willing to price it. If you're just seeing it as an AI infrastructure company, the answer might be yes. I mean, we see market cap of roughly $51.54 billion. Here we can go back to finchat.io. Again, check out my special offer on the link down below. But for this year, for the end of this year, the company is expected on average to make about $5 billion in revenue on average, right? So $5 billion, this kind of gives you a price to sales ratio of about 10. Now, for fiscal year of 2026, this company is expected to have revenue of about $11 billion. Now that's a price to sales ratio of less than 5. If you're praying for that growth and willing to kind of ride out kind of the volatility, it looks pretty cheap for December of 2026. That's about 2 years from now. Now, again, that price to sales ratio seems expensive if you are an AI infrastructure only. But if you start to kind of maybe believe that Corweave could be the next Azure, could be the next Google Cloud, could be the next AWS or someone around that, then it might be looking pretty cheap because obviously those tends to be very profitable business. We see kind of AWS making a lot of money for Amazon. So if you believe that's where we're going to end up going with Corweave, then these look pretty cheap. But I do believe volatility is kind of crucial. Now, remember, current forward PE ratio by the end of this year is about 10. Forward 1 year, which is the end of next fiscal year, is below 5. One of the customers or competitors in this space that you kind of hear about a lot is Nebius. Now, definitely has kind of similar growth opportunities. But I do believe CoreWeave has the opportunity of building systems a lot faster, and that is super crucial on getting long-term contracts. Nebius, I believe, is trying to do it in a whole different way. They're kind of looking for some other players, not your big cloud server providers. While they do have customers like that, it does seem like their business model might differ a little bit. I do believe CoreWeave, the ability to have those long-term contracts because they're able to build those systems right away is super crucial. And CoreWeave has an amazing partnership with NVIDIA. And you guys know me, I follow NVIDIA like no tomorrow. Now, I'm not throwing any shade at Nebius. It was just more my reasoning. I wanted to increase my percentage of success. And I think with CoreWeave, I believe I have a little bit of an edge knowing that it is a little bit closely followed more by NVIDIA. This doesn't say that I'm bearish on Nebius. I just, again, if I had to pick one, I would choose CoreWeave. But now, if we're looking at expectations here for Nebius for the end of this fiscal year, is expected to be about 548 million. This company right now is sitting at a market cap of less than $10 billion. So that would give you a price to sales ratio of around 17, if I'm doing my math correctly. And for the end of next year, it would of fiscal year of 2026, so December of 2026, they're expected to do a little bit over $1 billion. Now that price to sales ratio drops to 9. If you're just looking at a price to sales ratio, CoreWeave definitely seems a little bit cheaper than Nebius. And maybe I'm butchering the name. I'm not trying to do a versus to versus, but just why I kind of would prefer CoreWeave even with the current run up at the moment. Now, some other things here. Let's jump into CoreWeave. CoreWeave, if we look here at FinChat, we can see kind of recent news. One of the recent news came out on May 19th. That came out as an SEC file on the 8K. So on May 19th, CoreWeave announced that they were going to offer about $1.5 billion in senior notes. So they were going to get some form of debt for the overall company. Now, the market actually really liked this on March 19th. They're seeing this. If the company is building this much, needs this much debt, it means they have a lot of revenue and growth potential. Now, today, which is not on their SEC report, so we can't find it on FinChat at the moment, but on Investors Relations, we can see that they actually increased the sizing of that by $500 million to $2 billion. Now, I'm not too much of a fan of their interest rate at 9.2% by 2030. I believe that's a little bit expensive, but I'm going to explain why it might not be as scary as some investors might think. But overall, the market really liked this $2 billion. It showcases that the company is investing very heavy and is seeing a lot of traction on their AI infrastructure. And like we saw earlier, CapEx follows revenue growth, and that has to be crucial. I remember when CoreWeave did their IPO, I wanted to kind of realize, did they reduce the amount of original shares that went public when they IPO'd? And the answer was yes. CoreWeave did reduce the original amount of shares that went public in its IPO. Initially, CoreWeave had planned to sell 49 million shares between the price of 47 and 55, which would have raised 2.7 billion. However, the company decided to reduce the IPO, ultimate selling about 37.5 million shares at $40. That was a 23.5% reduction in numbers of share. The reason I'm saying that is this company had originally planned on selling X amount of shares. They actually sold about 10 million less shares compared to what they were expecting. And the reason that is crucial is you are seeing them raise this debt. Now that the stock is up to $100, it actually makes more sense to kind of let go of some of those positions, increase that cash, and be able to fund even better. So in the long term, because the IPO was weaker, it actually could be seen as a bullish case that they have this extra amount of shares that they can let go to build up more cash. Now, obviously, that would mean that maybe there would be a nice selling pressure on the stock, and the stock could kind of take a massive hit. But overall, that is a nice amount of cash opportunity that this company ended up saving when the market was not too happy about Corweave. And right now, the market is very, very excited. Some other things I wanted to know is, does NVIDIA own Corweave? We kind of saw NVIDIA's 13F report, and I wanted to pull it up, but here we can do it in finchat.io. Just ask the AI really quickly. And NVIDIA owns a significant stake in Corweave, and they talk about it that Corweave, they actually own about 7% ownership in the company. This stake was initially valued at 900 million as of March of 2023. The stock has increased dramatically since then, so I'm going to guess that valuation is actually closer to $2 billion right now. So again, seeing that backing from NVIDIA could be seen as a bullish case. I think for me, the biggest red flag is a stock going up so quickly in such a short amount of time opens up the can of worms that the stock can take a massive, massive reversal. The answer is when. Is this the top? I don't know. But as someone who owns a nice amount of position, I don't mind dollar cost averaging out as well, and never selling the whole position either. Just taking and locking in some gains as it continues to step up and up. Now, what else do we have here from Corweave? So like I mentioned, this company is expected to spend about $20 to $23 billion in capital expenditure later this year. That means that there is a lot of revenue growth potential. So is it too late to kind of enter into Corweave right now? I don't know. I mean, would I buy the stock at these levels? The answer is no, but that also is influenced by a lot of things. First thing is, I'm already very, very heavy in the AI infrastructure market. I already have a very, very healthy position. If I wanted to, maybe it would be via small dollar cost averaging. Now, I'm not saying the stock can't go up, right? The stock can 100% continue to go up, continue to destroy the overall space. But I, as an investor, like to look at it as a risk to reward ratio. And that risk to reward ratio is not in my favor. So if it continues to go up, I wouldn't be sad that I sold some shares here. I actually would still be happy that I own still a healthy amount. So let me know, what are your thoughts? Again, don't forget to check out finchat.io. I do have this new partnership with them. I use them. You can see how I've used their AI solutions, their estimate solution, their transcript solution. And I'm not going to lie, the price isn't that crazy. So take care, have a good day, and see you all next time.